It's hard to breathe, but that's alright. Hush.
Understanding one of the most trusted and reliable theories in trading. In the pantheon of legendary technical analysts, perhaps none sits higher than Richard Wyckoff himself. Observing the market in the early 20th century, Wyckoff pioneered a method in technical analysis that is still widely used by a lot of traders today. The Wyckoff theory, or Wyckoff method, whatever you want to call it, is one of the best blueprints when it comes to picking winning trades or winning stocks, right? Well, the best times to buy them, the most effective risk management approach. Now, observing price action, Wyckoff ultimately formulated his theory, which identifies key elements in the development of trends. In his model, these periods are marked by accumulation, markup, distribution, markdown, and it's a big one. It's just a big cycle, right? So, before we move on, who was Richard Wyckoff? Now, Richard DeMille Wyckoff was a famous stock trader and investor, born in the late 19th century, so specifically 1873 to 1934. And Wyckoff was a pioneer in a technical analysis approach to the market research, right? Wyckoff analysed these market operators and their operations and concluded where risk and reward were optimal for trading. So again, he understands that the markets are manipulated and he's just looking at how the institutions are operating, right? He shows a position of stop losses at all times and the importance of risk management of any trade. And he explained techniques used to campaign within a large trend, so bullish and bearish, right? Wyckoff also founded Wall Street Magazine, and as we know, he had over 200,000 subscribers, which back then was a lot. Wyckoff also married 3 times, and he died on the March 7th, 1934 in Sacramento. So how Wyckoff theory works? Well, the Wyckoff method or theory breaks down stock selection and entry into the market in 5 steps. Any trader looking to apply this theory to their own maneuvering in the market needs to adhere as follows. So I'll put a picture on the screen if you want to see what the Wyckoff, especially schematic number 1 accumulation looks like. A bit more of a real life example, so you can go ahead and look at that. So number 1, determine where the market currently sits and project its future trend. And number 2, I know it says select stocks and harmony with the trend, but all he's saying is pick assets that go along with the identified trend. Number 3, so I'm going to try and simplify to what the website says. Number 3, pick assets with a cause that equals or exceeds your minimum objective. Okay. Number 4, determine the asset's readiness to move. Number 5, time your move with a turn in the FOREX market index. Okay. Understanding Wyckoff's trading price movements. So the key part of Wyckoff's market observations was with price movements, right? In order to understand assets and the market as a whole, he developed the practical method he named the composite man. Now, Wyckoff's composite man, the theory that all the price movements in the market should be looked at as a result of one's manipulation of an asset, right? If you don't understand the game as he plays it, the asset move away from your favor, and if you understand it his way, it will work in your favor. Okay. His big advice, or number 1 advice to traders today, was to play the game as this fictional composite man played it, and his belief didn't matter. His belief was it didn't matter if the market moved because of real buying or selling, or whether it moved by artificial price manipulating moves by large operators, right? So Wyckoff's rules. So within his method, Wyckoff laid out several rules for traders to follow and look out for. So individual assets never behave in the same way twice. Instead, trend unfolds through a wide variety of similar price patterns that display unlimited differences in size, detail, and extension. Every time they appear, they change just enough to surprise traders and confuse the market. This is known to many current traders as a shape-shifting phenomenon, right? Context is king in the financial market. This means that the only way to deconstruct today's price is to look at it historically. So look at it, what did it do yesterday? What did it do last month? What did it do last year? This infers that analysing today's price out of context will lead to incorrect conclusions, right? So moving on to why you should use Wyckoff's method. So the main reason for, especially Forex traders, is to use the Wyckoff method is because it allows traders to recognize the upcoming price moves. So it's pretty much looking into the future if we see it, right? By marking the end of an accumulation stage, traders will be alerted to the beginning of a markup, right? So moving up. They can then proceed to trade on the long side to look for buy opportunities. Okay, on the contrary, the end of a distribution phase marks the beginning of a markdown in which traders can trade on a short side, so look for sells, right? When you understand the different stages within the price cycle, it allows you to position yourself for the next expected price tendency, right? You can try to buy to as near to the beginning of markup and hold as near to its end as possible. Okay, but also with everything there must be cons and there must be pros as well. So we just covered the pros, so why you should use it, and let's look at the limitations of the wyckoff method. So while there's a clear concept put forth in the wyckoff method, and the details are far murkier when it comes to clearly defined figures and patterns. So this could be a major setback for new traders not yet familiar with the ins and outs of the market and price movements of supply and demand, and it takes a lot of experience to master this method, and it does. Another drawback of the method is that it's not ideal for high frequency trading. So again, it works best on the shorter time frames. So if that's not your angle, then consider another method or theory. But again, you're trading order blocks and stuff like that, so it doesn't really matter. But if you want to see the wyckoff, then you usually see it on the small time frames. But again, you can see it on the high time frames. And once you do see it on the high time frames, then obviously we want to respect the high time frames, because the high time frames are just pretty much more powerful than the lower time frames, right? So again, wyckoff method within your trading plan. So once you perform your wyckoff analysis within the current, the current market cycle should be clear to you. But in order to take full advantage, your trading plan must account for it and be really executable, readily executable, right? A well-crafted trading plan that seamlessly incorporates the wyckoff method could be productive for the right trader, but traders with a bit less experience need to be advised that it's a highly complicated process and takes much time to master, right? And it does. But yeah, the method of the wyckoff theory summary. So I'm just going to quickly summarize what we've spoken about, right? So many professional traders until today use the wyckoff method. Okay, his stock choice and investment method has stood the test of time, mainly because of its basic, systematic, and logical structure for identifying high probability and highly profitable setups or transactions, right? So Richard Wyckoff established key principles such as trends, stop loss, take profit, and etc. in the early 20th century. And these timeless concepts continue to educate traders and investors even 100 years. It's going to be going on for years, I would say. And if you want to learn more about this, obviously just stay within this section of the course and take in the information. But yeah, that's pretty much an introduction. I didn't want it to be a long video. Everything on this website, so what I've just spoken about there was pretty much what I covered. So the composite man, the price cycle. But we'll go more into depth about the other things later on, so looking at these phases and how to actually identify them. But what I would personally do, if you want to learn even better, if you want to understand what I'm saying a bit more clearer, is just go ahead and read this website. Now, I do have a PDF file as well, but like I said, the more in trading, when it comes to especially forex as well, the more you learn, the more you will earn. So there's no harm in learning, reading all of this. Take you about 10 minutes to read all this part and the 3 laws and composite man and price cycle, right? So if you read those, for the 10 minutes, it's going to really change your trading game, right? And obviously I'll show you how to identify them in the next section, in the next video of the course or the section. It's so complicated, I know. But yeah, thank you for watching, guys, and that's pretty much Wyckoff in a nutshell. Absolute legend in the technical analysis. And yeah, thank you for watching, guys, and I'll catch you on the next video.